What's going on YouTube? In this video, we're talking about AMD, or also known as Advanced Micro Devices, ticker symbol AMD. Year to date, this company is up 67.5% over the course of 1 year. It is up 58%. So AMD, what they do is I would call them their main focuses is GPUs and CPUs. For what I know about them, those are the two main components to this company, right? And they're also trying to join in the AI hype race and take some market share from Nvidia. That is their plan, their goal. They're trying to get some of that AI revenue that is inevitably bound to happen. So let's look at their revenues and their overall financials and figure out where AMD is sitting. And then we'll go through the calculators and figure out what this company's worth. Revenue, gross profit, net income. Revenues exploding, gross profit also trending higher. Net income is not heading higher right now. And we'll go over that in a second. So gross margin sitting around mid to low 40s, pretty good. Net margin, which we can see up here, is trending lower. So our net margin basically, so what we're going to take is our gross profit and we're going to subtract out SG&A, R&D. That gives us operating income of that. And then it looks like they get to add in a little bit of taxes, and then that gives them a net income of negative $26 million. So what we're looking at here is our SG&A and R&D has exploded higher over the last few years, which it makes sense because they need to hire more people so that way they can catch up in the AI race and try and take some of that market share from Nvidia. So that's going to require a lot of R&D expenses and also require a lot of people, a lot of intelligent people to help out with this process. So they're using up basically everything they're making and then some, uh, just to play catch up, I believe. So revenue and gross profit year over year is just kind of all over the map at the current moment. Obviously trending lower right now. Return on invested capital is zero. Basically, there is not much. It was trending higher, and then AI came out, and then it disappeared. Cash to debt. Currently, they have almost enough cash to cover their short-term debts. Typically not ideal, especially in the shorter term. You want to see more, but history shows that that is how this company has pretty much always ran. So probably nothing to be concerned about there. Kind of same thing with cash to long-term debt and short-term debt combined total debt. They've always had way more liabilities than cash. Net income to free cash flow, we have almost no net income and $1.8 billion of free cash flow. We can see this over here. Our free cash flow is basically hovering around zero and then all of a sudden just exploded higher. So in 2021 is when free cash flow exploded higher. So in column 2021 here, it was their record net income year of $3.1 billion. And then they added in a little stock-based compensation. Operating cash flow was then 3.5. You deduct out your 300 million in CapEx, you get 3.2 billion in free cash flow. So that was a very valid free cash flow year. And then the second year, 2022, 1.3, you add in $1 billion of stock-based comp. That's not ideal. That gives you 3.5 billion plus the other few numbers that get mixed into that equation as well. Capital expense, you take out a capex, and then you get $3.1 billion. And now zero basically net income, and they almost all from stock-based compensation and another few sources to give them a higher operating cash flow. Take out their capex, gives them $1.8 billion free cash flow. So now they are no longer profitable on their business, their main core business. So basically, they're the only place they're making money on is selling stock to stock-based compensation and common used stock. They are issuing more stock as well. So a couple, you know, it makes sense, right? Because they're trying to collect as much cash as they can. They're trying to save cash, so they're paying their employees instead of paying them out of revenues. They're going to pay them in stock-based compensation, so that way the company can have more cash to pay for this R&D and SG&A, and then that way hopefully one day they can start producing a competitive product against Nvidia, I believe is their ultimate goal. So we can see our share count is getting diluted, our capital expenditures are growing, quite rapidly, but still kind of a nominal number for this company currently. But it's starting to get, I wouldn't say worrisome, but it's starting to grow quite a bit. So over here at the financials, really what we're really concerned about is their net income. It makes sense, when you look into it. Like this company is going to be, you're going to be buying this based on the story. You're going to believe the story that they're telling and what you think is going to happen with AMD. If you think they're going to come out this profitable on the other side, then this is probably a good place to buy based on technicals. If you want to invest your money into something that is proving to be profitable, right now is not the time on AMD. So let's look at comps. We have four other comps here. We have NVIDIA, Intel, TSM, and TXN. AMD, we have pre-tax margin is negative. We already went over that. Return on invested capital is negative. Operating cash flow is more than our net income currently. So down here at the market cap, we can see NVIDIA is the leader in overall market cap, not the leader in revenue. TSM is leaps and bounds higher. However, TSM is not as much a competitor to AMD, but it is a potential partner. But I still qualify them as a potential something to compare to. I think anyway. Growth rate. Nvidia. It's no surprise Nvidia is the leader on the growth rate. This number makes sense on Nvidia. Nvidia is, when you think of AI, you think, personally, I think Nvidia. I don't think of AMD. I definitely don't think of Intel. Gross margin. Nvidia. If AMD can catch up to Nvidia in gross margin, get up to like 64% range, right? It might have a spitting chance at growing its profit margin and everything else. So operating margin negative, profit margin negative. Where Nvidia is substantially higher. Free cash flow, TSM, Nvidia, that's going to change. They're sitting at $10 billion of free cash flow. That's probably just going to grow. TSM sitting at $294 million. Did I say billion? I meant 10 million. Or no, this is in millions. Yeah. $294 billion in free cash flow in TSM. Wow. Return on invested capital, 26%, and AMD is at a zero. And you look at the PE, NVIDIA, very, very rich on the PE. It makes sense because of the future growth of what it could be had on AI. So a 237 PE on NVIDIA is sounds extremely richly valued, but that's one of those you got to look into because substantial growth at this company. So AMD, if you look at all these charts here, it has a tremendously large amount of work to do just to catch up to NVIDIA. And again, this is something that you'd want to look at as buying the story, not so much how the company is currently financially doing. So I think it was worth noting and sharing here. We're gonna compare AMD to Intel because I'm sure most of us, if not, some of us at least know Intel's story and how Intel has just been beaten down. And we can kind of see here in comparison how similar in percentages, free cash flow, return on invested capital, PE, all these things is um, how kind of similar these two companies kind of are in terms of financials. So I think it's worth sharing and noting that, you know, you look at the growth rate, AMD is a little bit better. You got your market cap, AMD is a little bit higher. You have your revenue, which AMD doesn't have as much revenue as Intel. You have your gross margin, so better gross margin than Intel. Operating margin, Intel's worse. Profit margin, same thing. But you're looking at percentages that are nominal. You're talking 1%. And over here on percentage differences, you're talking 2% difference. See, it's not like it's a 10 and then a 30% negative difference. And then free cash flow here, the only reason they're positive on AMD, I'm not familiar with Intel's current free cash flow numbers right now, but we know AMD, the only reason they're positive free cash flow right now is because of their stock-based compensation. Otherwise, they would be negative. And then the return on invested capital we know is negative. Intel's return on invested capital, look at that. It's basically the same. And then PE, obviously, you can't really go off that because you're sitting at negative 268, whatever number, right? So figured I want to share that, just compare those two companies to one another because they're both not profitable companies. And my concern is that they might turn into an Intel where they just can't turn a profit. They just can't get out of their hole. Um, so it's just worth sharing, worth noting, worth potentially looking into and comparing those two companies to one another. Peter Lynch valuation on AMD. Currently, Peter Lynch gives them a negative $2.06 per share. Multiples comparison, we have our multiples in here. We're going to remove Intel because Intel is also not a profitable company. We have our manual PE on this company, our market cap, minus our cash, plus our debt, divided by cash from operations. This company currently is trading at like a 75 PE. Very richly valued. Very, very richly valued. Price to book, there is nothing here. PEG ratio, forward looking, sitting at 2.32, so still very richly valued forward looking. Grams valuation, giving them a negative $1.91 per share. Discounted cash flow, price per share. Analysts have analyst growth rate and free cash flow of 15%, so I matched their 15%. History of their average growth rate is 73%. So we can see how their free cash flow has trended, has exploded the last 2 years. However, the most recent year is basically all SG&A, or sorry, all stock-based compensation. Down here at Rule 72, I punched in their forward-looking EPS and PE based on our three sources for an average growth rate of 42% EPS growth rate. 42 goes into 72, 1.7 times, and then 1.7 goes into 10 years, 5.8 times. So basically, we're going to double our EPS 6 times. So that gives us 176 future EPS in the next 10 years, which values this company at $3,684. Now, I could actually see that potentially happening if, depending on what AI can do for these companies and how much profit they can make. But let's change this to closer to like 20%, and then that'll give us an 11 for a forward PE. So that values this company, which is probably more fair, honestly. So there's a 20, 8.5, and 14% growth rate on EPS, which gives them a 14.1% growth rate forward looking, and then that gives them a fair value of $79 or $78.92 per share. So if we run all these numbers, that gives us a fair market value today of $21.70 per share, 30% margin safety, $15.19 per share. Analysts have a price target of $129 or $129.69. Now, here's what we're going to do. We are going to punch in their EPS of 275 and PE forward looking of 39. All right, so now we got those numbers punched in. Our Peter Lynch fair value, then, mind you, they currently have an EPS growth rate of 103%. We could probably change that as well. Let's put like 50% in. I think that's a much fair number currently. So that gives them a price tag on Peter Lynch fair value of $117.19 per share. Our multiples comparison, $132.72. Our manual PE is still really overvalued. Price to book invalid. PEG ratio still telling us it's really overvalued. AMD on Graham's valuation here, $120.56 per share. And then our discounted cash flow will stay the same, and so will our Rule 72. So now we come over here, we have a fair market value on this company of $96.78, 30% margin safety, $67.74. Analyst price target, obviously still the same. That, in my opinion, is what AMD is worth in the next 12 months. So even forward looking, you're going to be paying a premium for this company. I think analyst price target is a bit high personally. I think there is room for AI growth, but I believe they need to kind of still prove that they can pull a profit out of there. But let's hop over the stock chart. Currently, you have this longer term uptrend line here, and they are holding it. They broke through it there in October last year, and since have came back and trending above it now. They just retested the shorter term uptrend channel and looking like they want to turn higher and potentially run up higher. They're probably going to hit resistance at about $130 per share. I think it's going to really depend on how their next earnings. I think this is going to be really, really dependent on how earnings and how they are vocalizing their future outlook of their company and how revenues are trending and how everything else is looking on this company and growth rates and stuff like that. I think there's going to be a lot of focus, maybe not so much on their actual earnings as much as what they're going to be telling the investors of how things are going at the company. So I think that is how this is going to be trading. That's how Nvidia is trading. Nvidia is not trading based off of financials right now. It's trading off of the future outlook of what the company is telling investors. of what is to be had at their company. So I think that's what should be looked out for on an AMD next. So that's AMD for you. You know, we're looking at a fair market value of $96.78 per share for a fair market value. And again, analysts sitting at 129. Is there a chance that AMD runs substantially higher? Absolutely. Again, this is something you buy the story on, not buy on the financial side of things. But that's it for AMD. If you found value in this video, drop a like, comment, subscribe, and we'll be back later with another stock analysis video.